over 126 earlier today. The latest rip higher coming as investors look for more public market access to crypto, sparking a slew of new digital asset treasury companies. For more on that, let's bring in Pantera Capital general partner Cosmo Jiang. Cosmo, thanks for joining us. Listen, Galaxy Digital, Mike Novogratz's company, just announcing more trading on their platform today. Robinhood, we know what they've done. How much has this opening of access mattered to the price of crypto generally?
Oh, this year is all about so many headwinds becoming tailwinds for crypto, especially around this idea of equity investors embracing digital assets in a big way. We've seen the flows really start to pour in, right? From the ETF perspective, the ETF inflows to the Bitcoin ETFs have now exceeded the amount that's come into the NASDAQ since launch, which is pretty crazy to think about.
That sounded important. Can you repeat that again?
Total inflows in the Bitcoin ETF since launch have exceeded that into the QQQ, into the NASDAQ. That's the amount of overwhelming demand there is.
I mean, not insane crazy, but that's a hell of a stat. I'm going to steal that.
Isn't that crazy? Right, and we're now seeing IBIT, which is BlackRock's Bitcoin ETF, is now approaching $100 billion of assets alone. It's now BlackRock's most profitable ETF.
Is the argument that Bitcoin deserves a valuation, maybe not of the gold market, which I think is now north of $22 trillion, but somewhere closer to where it is now, which is why you can make an argument that Bitcoin 100,000 should actually be $500,000 a coin?
I'd argue Bitcoin's a better version of gold because it's digital. It's easy to transport. It's cheaper to transact. It's global. It's permissionless. You don't need to carry around a heavy rock with you wherever you go.
Yeah, but you can lose it.
You can lose.
Throw away your USB drive.
Right. Luckily, we have a lot of investments in custody providers that can make it easy for you to store your Bitcoin. But yeah, if you believe that this could be a better version of gold, I mean, we're going from 2 trillion to 22 trillion to 22 trillion plus, so we could see 10x plus upside from here.
So what have all the Bitcoin lovers already bought in? I mean, I think that's all. Stocks go up because there are more buyers than sellers, or there's more buying pressure. Okay, so do you think there's still people out there that are like, oh, Karen, I just don't know. Should I buy Bitcoin? I'm on the fence. Do those fence sitters still exist?
Of course they do.
Oh, yeah, absolutely, Brian. There was a Bank of America survey that was published actually a couple weeks ago.
Of course they do, you idiot.
Sorry. Please, go ahead, Cosmo.
Yeah, it seems crazy to think because all of us around this table have started to really get it. But there was a Bank of America survey from a few weeks ago that showed more than 60% of investors still own 0% exposure to digital assets. That's quite a lot. And so the idea that digital assets is too late in the game isn't true if most people don't own it.
So what about some of the other digital assets, right? We saw Ethereum go nuts, Solana go nuts. Do you think there's more opportunity there than Bitcoin, which is sort of like, your father's Oldsmobile digital asset?
I think that's exactly right. So from our perspective, everything that's happened over the last few years has all about been legitimizing Bitcoin, and now I think a lot of people get it. The next step, and really what Congress legislation is really enabling, is for the rest of the digital assets to really have their place. Ethereum, Solana, these things are large tech platforms that are now growing at a rapid pace. And we believe Solana is on pace to be what could be the next generation mega cap tech company.
Cosmo, first of all, congrats on Pantera's position with some of these portfolio companies that have just been stratospheric in the public market. So you guys have done an incredible job. How about stable coins? And how about trading at a multiple of the underlying asset? That's some part of this that to me seems really, I'm not going to use the bubble term, it just doesn't make sense to me. And should these things be trading closer to NAV?
Well, so the reality is that some of these digital asset treasury companies are actually pretty interesting structures. When you think about it, it's really a difference between passive and active management, right? Passive, you can go out and buy a spot ETF. It's great. It does what you need it to do. But if you want an active manager to add value, to acquire assets in a constructive way, to do staking, to interact with DeFi, that's worth something, and it generates excess yield. And that's why some of these DATs can trade above 1x book.